Everpure, ticker symbol P, just beat Q2 consensus, like across the board. Revenue hit $1.186 billion.
Right, which is up 38% year over year.
Yeah, up 38%. And adjusted EPS came in at 70 cents, crushing the 58-cent estimate. Oh, and they raised the full-year fiscal 2027 revenue guidance massively. It's up to a range of $5.03 to $5.07 billion.
And, the market reacted exactly as you'd expect. It sent the stock surging cumulatively over 9% post-earnings as investors digested those numbers.
Yeah, so what happens when a data storage company decides to, eat millions in inflation costs just to starve out its competitors? Well, you get the massive quarter we just read.
Yeah.
So today we are stripping down Everpure's earnings transcript and the latest analyst notes.
Right.
Just so you, as a retail investor, can actually see the mechanics driving this beat.
Well, to understand how they pulled off those revenue numbers, you really have to look at how customers are splitting their spending. Product revenue, so the physical hardware, that soared 54% to $687 million. But subscription services, specifically their Evergreen One offering, that grew 20% to $499 million.
Okay, and overall non-GAAP operating margin hit an impressive 19.4%. But here is the mechanism that caught my eye. Management explicitly stated they are intentionally operating at the low end of their product gross margin range.
Right, keeping it between 65 and 70%.
Yeah, exactly. They're actively absorbing semiconductor inflation rather than passing it on to the customer. It's like a classic loss leader or a razor and blades model.
Yeah.
You sell the highly discounted razor, the physical storage arrays, because you know the customer will be locked into buying your premium blades, which is that Evergreen subscription, for the next decade.
Exactly. They're sacrificing short-term hardware margins to guarantee long-term recurring revenue. And honestly, the strategy is working beautifully.
Right.
Customers are accepting these setups because, well, enterprise data infrastructure isn't optional anymore.
Yeah.
It's mission critical. So they're happily shifting over to the subscription model to smooth out their upfront hardware costs.
Oh, sure. That makes sense.
Yeah. And that guaranteed recurring revenue is exactly why the total contract value run rate for Evergreen One just crossed the $1 billion mark.
So that aggressive pricing strategy isn't just about beating legacy competitors today. It's a Trojan horse to get their hardware into the massive data centers running AI.
Right.
Because management hammered on this concept of data primacy during the call.
Yeah, data primacy is essentially this idea that enterprises must organize and clean their data, specifically for AI readiness. Like, think about it. If your internal data is fragmented or, siloed,
Right.
your multi-million-dollar AI tools will just output expensive garbage.
Yeah, garbage in, garbage out.
Exactly. Everpure is positioning its ecosystem to be the foundational layer that makes enterprise data completely usable, fast, and reliable for those AI models.
Which brings us to the massive scale side of things. They just announced a second design win with a top 5 hyperscaler.
Oh.
And for those tracking the space, a hyperscaler is one of those massive global cloud providers. Think your AWS, Google Cloud, or Microsoft Azure.
Right.
Getting your hardware into their data centers is basically the holy grail.
It is the holy grail. And it absolutely validates Everpure's direct flash architecture.
Wait, let's break down direct flash quickly. Why is a hyperscaler choosing this over, standard solid-state drives?
Well, traditional drives have a middleman, like a hardware controller that translates data between the system and the flash memory.
Okay.
DirectFlash skips that middleman completely. It allows the software to talk directly to the raw flash memory.
Oh, wow.
Yeah, by eliminating that bottleneck, the drives run much faster and they use a fraction of the power.
Which is a huge deal.
The massive deal for hyperscalers who are desperately trying to keep their incredibly hot, power-hungry AI servers from overheating. But to ground the excitement just a bit,
Sure.
Management did clarify this specific hyperscaler deal won't generate meaningful revenue until fiscal year 2028.
Oh, okay, so it's a long-term catalyst.
Right.
So securing that long-term future comes with a really steep short-term price tag. Because I'm looking at their free cash flow, and it was intensely negative this quarter.
Yeah. What?
Like negative $238 million.
Yep.
I have to push back here. You called their pricing a brilliant grab for market share. But as a retail investor, seeing $250 million evaporate in 3 months usually sends me running for the hills.
Well, yeah.
Why isn't this just reckless cash burn?
I completely understand the panic when you see a negative $238 million print.
Yeah, it's alarming.
It is. But if you look at the balance sheet mechanics, this isn't a structural failure. That cash burn was driven almost entirely by a strategic pre-buy of NAND flash memory components.
Okay.
So the NAND market, the actual memory chips that go inside their drives, it's incredibly tight right now.
Right, prices are soaring.
Exactly. Everpure essentially bought a massive stockpile of inventory at today's prices to hedge against future supply chain inflation.
Ah, I see. So they locked in their raw materials before prices spike even further.
Yep.
That actually protects their margins next year, while competitors who didn't hedge will be forced to pay premium market rates.
Exactly. It's a masterstroke in supply chain chess, really.
Yeah.
Just turning cash into physical leverage.
Right.
However, there's a legitimate risk from the analyst notes that you shouldn't ignore.
What's that?
Substantial insider selling.
Oh.
Yeah, top executives have been actively liquidating their own shares right around these all-time highs.
Always something to monitor closely when a stock is trading at a premium valuation. You really don't want to be the one buying if the architects of the company are quietly taking chips off the table.
Precisely. But looking beyond the insider trading and focusing on fundamental demand, this quarter raises a really fascinating question about the future of the industry.
Okay.
If enterprises continue this endless cycle of hoarding and organizing data just to feed their AI models, will storage hardware companies like Everpure eventually hold more pricing power than the AI chipmakers themselves?
Wow, that completely flips the narrative on the AI boom. We always talk about the chips, but without the data vault, the chips are useless.
Exactly.
That's exactly why we put this custom deep dive together for you today. Sometimes the real story is hidden in the supply chain, not just the revenue line. Make sure to follow the show for our daily earnings coverage so you never miss these insights.